what are some of the verbal cues to listen for from today's FOMC as Powell takes center stage? That's what I'm talking about in today's video. In the past few videos, I've discussed what technical levels I'm watching for the S&P 500, for Bitcoin and others. But today I want to focus more on the fundamental side. What verbal cues am I watching for that could be bullish or bearish for the crypto market? Now, before I get started, if you guys do enjoy this content, be sure to subscribe to the channel and click the bell icon to get notifications so that you don't miss any of these videos. All right, so let's talk about this today. So again, I talked about in recent videos what key levels to watch for Bitcoin, even Ethereum, as well as the S&P 500. But today I want to kind of switch gears a little bit and talk more about what verbal cues I'm listening for as Jerome Powell, Fed Chair, takes center stage today. So FOMC kicks off at 2 p.m. Eastern with the Fed rate decision, and the press conference is at 2:30. Now, markets in general have pretty much priced in a 75 basis point rate hike. Okay, that's kind of the consensus right now. They could come out and surprise the market with a 100 basis point hike. The chances of a 50 basis point hike I think are slim to none given the inflation numbers we've seen recently. Now, if they come out with a 100 basis point hike, yes, that is going to affect markets in a negative way. We could see a very sharp sell-off to begin with, but as I've said recently, it is all going to depend on how the markets react to that going into the daily close. All right, that first initial move that you see in the first few minutes up to maybe half an hour or so is typically wrong. So keep that in mind as we move into today's FOMC. But the big clues that the markets are looking for right now are going to come from the press conference as they usually do. So let's just assume for now that the Fed is going to hike 75 basis points, which is the consensus. So if they do that, I think it's pretty much, neutral. We could see some gyrations up and down as we typically do, but overall it's pretty much neutral. The markets, however, are going to be looking to that 2:30 p.m. press conference, and they're going to be looking for verbal cues from Jerome Powell as to where we go here over the next few weeks. So that's what I want to talk about today. So first of all, we're going to be looking at peak CPI. I'm sure he's going to be asked this question. And look, while Powell doesn't know whether CPI has peaked or not, what he says about this is going to affect markets. Does he insinuate that CPI has likely peaked, or does he kind of dance around the topic as he likes to do and say that, look, it looks like it may have peaked. However, we don't know that yet. It could move higher, et cetera, et cetera. So depending on how he answers this questions, markets are going to be paying attention to this. They want to know that CPI has peaked. If inflation has peaked or likely has peaked, markets are going to like that, and it's going to be a bullish signal. However, I don't expect that to last too long in the markets. We could see a nice spike up. However, I don't think that's really going to drive markets forward too much, just because, as I said before, he doesn't know if inflation has peaked any more than you and I do. Now, what he does know and what he can control is what they do about the yield curve. All right, so this is the second one that I want to talk about here, the yield curve. So the Fed uses a different barometer for their yield curve than really the rest of the market does. And right now we're seeing some inversions play out. Now, typically when there's a yield curve inversion, that signals a recession is coming or already here. The Fed has kind of danced around the subject a little bit. And again, they use a different barometer than the rest of the market does really. So what he says about the yield curve though is going to be key. And it's not so much about the inversion itself as it is what the Fed plans to do about it. Okay, does he sound a little bit more accommodative and say, look, we are monitoring it, and if things get really dicey, we are willing to act, in which case the markets are going to like that, and it's going to be a bullish signal to markets. Okay, so an accommodative, what we call a dovish stance would be bullish for markets. But if he comes out and says that this up here, okay, CPI takes center stage, we have to get inflation down no matter what, regardless of what the yield curve is signaling, that is going to be a bearish signal for the markets. Okay, so pay attention to that. And I think that that kind of language is what is going to drive these markets forward for the next week or two. And the third thing I'm watching today, the third verbal cue that I'm listening for from Powell, is going to be about GDP. Okay, we're getting some GDP figures for the US tomorrow on Thursday. So he's going to be asked this question of what does the Fed plan to do if GDP continues to slip? And once again, just like I talked about with yield curve, the language around that, is he more accommodative or is he more hawkish, more aggressive in saying that, look, GDP could slip, However, we need to get inflation down no matter what. Okay, if he is more accommodative and says, look, we're looking at the yield curve, we're looking at GDP. If things start to get a little bit dicey, we're willing to kind of scale back a little bit and be less aggressive. That is going to be bullish for the crypto market, for the stock market. If, on the other hand, he says inflation is high, we have to get it down regardless of what GDP is signaling, that is going to be bearish for markets and could really drive markets for the next couple of weeks. All right, so those are the three things I'm going to be listening for during today's FOMC while Powell's speaking. First of all, peak CPI. Does he believe CPI is peaked? What does he have to say about that? The second one being the yield curve. What does the Fed plan to do in that case where we get recession signals flashing across the board? Because once again, even though we are seeing GDP print negative, we're seeing other inversions, with the yield curve. They do use a different barometer for that. So what does he say around that? Are they going to be more accommodative, or are they just going to press forward regardless to get inflation down? And the last one being tomorrow's GDP print. What is the Fed going to do if GDP continues to slip? Once again, an accommodative, dovish language is going to push markets higher. That's going to be bullish. And if he's more hawkish and says, we're looking at GDP, however, we need to get inflation down, that is priority number one, regardless of what GDP is doing, that is going to be bearish for the financial markets. All right, so let's go ahead and take a look at the technicals one more time before today's FOMC, which is in just over 2 hours. But before I do that, if you are enjoying this content, be sure to smash that like button and don't forget to subscribe to the channel and click the bell icon to get notifications. All right, so let's take a look at the S&P 500. Let me get rid of this text up here. So with the S&P 500, guys, what I've been saying now for a long time is as long as 3,900 holds, we can see this was tested during yesterday's session on Tuesday. As long as this level holds, okay, this was a significant breakout from the S&P. Now, it could be a false breakout. However, the S&P 500 would have to close back below 3,900 to confirm that this up here is a fake out. Until that time, we have to respect the breakout and assume that the market has the potential to continue to rally. So key levels for today, right? We're going to see volatility from FOMC. That's a given. We always do. So levels to watch here are just above 4,000 as well as 3,900. Okay, so 3,900 is a must hold on a daily closing basis, and 4,000, we're going to have to see a close above this in order to flip it to support. Now, I continue to think that this area up here, right around 4,200 for the S&P 500, is going to be a target, a short-term target, as long as 3,900 holds. Okay, and the reason for that, there are actually multiple factors here. So looking all the way back here toward March, you can see we had support back here, support through this area, and then resistance. Okay, so this area between 4,140 and 4,200 for the S&P 500 is going to be a target as long as the market is above 3,900. Now, let me show you something else about this before we get on to Bitcoin. So looking here at this recent range, okay, if we take the height of this range right here, so all the way down here to about 3,640, all the way up to 3,910, and we take the height of this range and copy this over to the recent breakout. All right, so the breakout here on this candle, you can see that we get a level right up here around 41.85. Okay, and that makes sense because look back here, that was the top of that resistance range. Now, if we take that, okay, remember 41.85 and move out here to encompass all of 2022. All right, I'm going to flip back to log view because that's what my fibs are set to use. And we draw our Fibonacci retracements all the way from the all-time high all the way to the recent low. So this encompasses all of 2022. This is the year-to-date range. Look where the 50% lines up. Okay, 41.88. Remember, 41.85 is the height of this recent range measured higher from the breakout point. Okay, markets love symmetry. It doesn't mean it's guaranteed, but I think that the 4140 to 4200 area is certainly one to keep an eye on. But it all hinges on 3,900. And if the S&P 500 rallies all the way up here to even 41.85, okay, that is going to mean a higher crypto market as well. So Bitcoin, Ethereum, everything should benefit. Now, speaking of that, let's take a look at Bitcoin here. Going into FOMC. So the market did drop below 21,600. That was a must hold for Bitcoin. We can see that 2 days ago, the market did close below it. Okay. So notice back here, 21,600 was resistance. Through this entire period, the market broke out on this candle. We had a retest of as new support. Now with BTC back below 21,600, that is the level to reclaim this week. Okay, if we can see Bitcoin close back above 21,600, that would be bullish toward 23,000. And you can see furthermore, we have some consolidation here into a channel, and Bitcoin right now is finding some support down here. I also think that mid 20s, so like 20,500, if we do see some volatility today, this could be an area to watch here as well that could be interesting. All right, but again, the bullish side here, Bitcoin has to reclaim 21,600 into today's close. That means an 8 p.m. Eastern close back above 21,600. That would re-expose the $23,000 area. Now get above 23,000. So you can see back here, it was resistance, and then the market broke above it, held above it for a couple of days. We got the close below, and look how precise this has been. All right, this is the level I've been talking about, where you can see the market close below it here, and then retest over 2 days as new resistance. Okay, so a close above 21,600 would expose this area up here around 23. Get above that, we're looking at the area just above $24,000, and potentially the area right around mid 25s, so like $25,500. But as for today's volatility, I do think you're going to want to keep a very close eye on 21.6. All right, the top of this channel up here, so right around like 22,000, as well as this area down here, right around 20,500. Remember, we can see a lot of volatility from FOMC, and it's not usually in a straight line. So expect a lot of back and forth within that first hour or two following 2 p.m. Eastern. And where the day closes is going to be critical for Bitcoin and the rest of the market. So that brings me to a bonus tip to wrap up this video. If you are at all confused about anything I just said, okay, and fundamentals are not your thing, the way to sidestep that and the safest way to play, to trade, events like FOMC is to wait for the day to close. So wait for that 8 p.m. Eastern close from Bitcoin today, see where the market's at, and then go from there. That's all you have to do. Trying to trade intraday, if you're not very experienced and you know what you're doing, can easily get you chopped up. All right, so if you're not an experienced trader, my advice is to wait for the day to close, wait for 8 p.m. Eastern, and if Bitcoin can reclaim 21.6, okay, then you can look to play a retracement there as new support up toward 23. And if the market closes below 20,500 or so, then we could be looking at a move back down here toward 19,000. The one thing I will say about that, I think the upside is easier to play right now with Bitcoin, just based on where the market is, because there is a lot of support down here. And a close below this area, you really wouldn't have a great risk to reward from that area. So I do think that the bullish scenario here for markets is a bit easier to play. And in fact, if I had to lean one way or the other right now going into FOMC, I think that we'll see a lot of volatility today, but I do expect for markets, both Bitcoin and the S&P 500, to continue their rallies maybe for the next week or two. All right, so that's it for today's video. I know it was a long one. Thanks for sticking around. And if you did find the video helpful, be sure to smash that like button, subscribe to the channel, click the bell icon to get notifications. And lastly, just be careful out there with FOMC today, guys. It is going to be volatile. It's going to be very back and forth. Again, if you're not sure, wait for the day to close and go from there. All right, good trading out there. I will talk to you all again tomorrow.